news just out this morning is that the leadership of the stockbroking community has written to the Minister of Finance and the coordinating Minister of the Economy to bail out the stock market. At this point in time, what do you see the government can do to help the equity market?
Well, certainly the name of the game is liquidity. You will certainly be aware that for a lot of onshore investors, the way the economy is now doesn't give too much room in terms of savings to be able to have extra money to put in the market. Clearly, we have a situation where with the tightening of the monetary policy, you don't really have too much of a propensity to want to save. And that's beginning to affect what local investors may be able to put in the market. The stockbrokers on their part have realized this. I'm not certain about what's in the proposal yet. That isn't widely known as of this time. But clearly I can be certain that, they have put in quite a few options for the minister to look at. And as soon as responses can be obtained, it'll be very good.
Let's look at the role that the pension fund community can play and pension funds can play in helping to revive the equity market. If you just look at where they're invested, they can invest up to 25% in equities. That's only sitting at 11% at this point in time. They continue to sit on the sidelines, continue to move into high-yielding fixed income assets, and they're, where returns are a lot stronger there. Do they need to change the rules for pension funds in order to get them back into equities?
Well, I'm certainly fully in support of changing the rules. It's time the pension funds took a play in the equities market. And had we had a lot more pension fund money in the market, we probably wouldn't have had the kind of fall or drop we had. Because as you well know, it's mainly because of the foreign investors taking money out and what's happening in the other economies. But if it was local money in the local market, that will give stability. Pension funds have a lot of funds, and they can actually start thinking in terms of alternative types of securities and instruments. And there's a need here for the stock exchange to also look in those terms. If equities seem to be an instrument to be averse to right now, then it's important we start looking at other hybrid instruments and other products that can give pension funds the sort of returns they want and the sort of risk profile they'd like to have.
Because they have to evaluate their returns on a quarterly basis, and of course the market has been down, as I said, 19.5%. So those returns they won't be able to show on their books anytime soon. But surely pension funds are long-term investors, and they'd see the value in buying up stocks at these cheaper levels.
Yeah, well, that's quite right. As I've always said, we again, want to look at the market, and clearly, there are quite a number of undervalued stocks in there, a lot of potential, a lot of long-term growth potential in there. And you can't get into the market at a better time than what we have right now. Without running through a list of stocks and their nominal prices, you can be sure that a lot of sectors, food and beverages, the cement, the breweries, they're trading well below their potential. And this is the time to put long-term funds in it. If we've got local pension fund money that's supposed to sit for 5-10 years and we can't bet it in the local market, then we're not doing the markets any good.
You mentioned the food and beverages sector. I know that's a sector that you particularly like. Of course, growing middle class in Nigeria. Just run us through some of your top stock picks at this point in time. Everything's looking cheap, but if you had cash, where would you be putting it specifically?
Well, interestingly, I'd be looking at the usual players. There's PZ in there. There's Nestle in there, although that's a high-price stock. But PZ is particularly interesting because the Q1 results were just released a couple of days ago, and you have a situation whereas there was an increase in turnover, the cost of sales was twice as much in terms of percentages as the increase in turnover, and therefore the profit after tax dropped. But then again, you're talking of a company that has the capacity to push products out into the market, to create awareness for its product, and to drive the turnover it needs to be able to achieve returns to its shareholders. Now, companies of that magnitude, those conglomerates, those multinationals, are the sort of food and beverages stocks, I would say. If you're committed to the market, you want to hold on to those stocks. And if you're looking for long-term gains, then those are the stocks you want to get into at this time.
You mentioned the rising cost picture in Nigeria. We've got high electricity tariffs on the line. We've got the removal of the fuel subsidy, increased cost in manufacturing, which will be passed on to consumers to some degree with the weakening naira. Going forward, what will it take to get local retail investors, Nigerians, seeing the value of putting money into equities at this point in time with all the cost pressures that they're facing?
Yeah, well, clearly what all those policies are going to do, what the effect of removal of fuel subsidy, inflation, high electricity tariffs, increased cost of goods, it's going to reduce the propensity to save. But we mustn't forget that there is a need to save, and perhaps this is a time for a lot more institutions to start putting together mutual funds, exchange-traded funds, and to try to get people to pool whatever savings can be made together into large funds. And funds like that tend to create a lot of stability in the market because they're managed by, pretty much aware portfolio managers who know what to do in terms of the fundamentals, what sectors to play at. And I guess local investors will benefit directly than having made direct investments into the market.
Now, speaking to the CEO of the Nigerian Stock Exchange yesterday, and he was saying that by the year end, they hope to have short-selling product on the market. They hope to list an ETF. Going forward, they're looking at a futures market. What do you make of all these developments, and could these new products spur increased activity in the markets?
Well, one thing I can tell you, and I was part of a session earlier this week at the Nigerian Stock Exchange. There are focus group sessions. The Stock Exchange is actively interacting with stakeholders in the market in terms of perception towards new listing requirements to attract new companies to the market. They're also looking in terms of products, what can be attractive, what can deepen and widen the breadth of instruments available in the market, and therefore perhaps liquidity and interest. So it is an active, it's ongoing, it started, and I certainly do hope it's something we can achieve by the end of this year. But everyone is committed to achieving that.
You mentioned the new listings. I mean, just looking at the stats here, we've got 40% of the economy accounted for by agriculture. Only 1% of the stock exchange is represented by the agricultural sector, and 0% of the upstream oil companies are represented on the exchange. Is there any timeline for when we might see these oil companies, telecoms companies, and agricultural companies being listed?
Well, there certainly are too many parameters, pretty wide at this stage, and I wouldn't try to hazard, a guess with respect to that, because each individual company is going to also look in terms of, its own corporate objectives and strategic objectives too, within the context of the local economy. But regardless of that, I think it's important for the stock exchange focus groups to look at these sectors, to look at these players, to find out what sort of incentives, what sort of requirements will attract them to list on the markets. If it will be their plain ordinary shares, if it will be other instruments which they would issue to raise debt or equity type funds locally. But there is a wide range available, and unless you start to engage those sectors directly and to speak to their corporate objectives, it's not likely. You may also want to bear in mind something that's impacted on the market. So far this year, we've had some delistings. We had Nigeria Bottling Company go off the market. We've got 4 of the rescued banks go off the market. I'm aware that NAMPAC is in the process of delisting from the stock exchange. So definitely the capitalization, without stock prices falling, the capitalization would have come down anyway. So it's pretty much important for the stock exchange to start looking at attracting new companies. They're very much aware of this. A lot of brokers are aware of this. And I can tell you something we're all looking to.